Hi, hello everybody. So now, first of all, congratulations for opting this course titled Core Accounting course, and also welcome to Core Arena Academic Management. So the reason why we started this course is personally when I was working in the companies, the corporates, when I spent time, I saw there was some amount of, rather substantial amount of a disconnect between the academics and what is practiced in the corporate. So we cannot say that it's completely out of connection, but the amount of connection that we have is the principles of accounting that what we have studied in academics is the same that we apply in the corporate also. But what is missing out here is the way we have understood accounting. Let us say, for example, in our academics, we have been taught the concept of the golden principles of accounting, which most of the people don't use it in the corporate. We don't use it. Rather we follow the American approach, wherein, and contrary to the golden principles, wherein we use personal, real, and nominal. We use in the American approach, we follow five different accounts, that is asset expenses, income, equity, liability. So that's more of convenient for me to follow than to follow these golden principles. See, also I would like to tell you that golden principles is one that is, I don't consider that as a golden principle, but I would like to rename it as a golden formula. So you need to really decode the golden formula to understand the back-end part of it. Let's say, for example, the personal account, it says debit the receiver, credit the bill. So this has become a by heart kind of for the students of accountancy. So, but you should try to understand the back-end part of it. What is the effect if I credit the receiver and debit the giver? What is the impact on the financials? How did they arrive at this golden rule of this debit the receiver and credit the giver? So all these things you need to know. So otherwise, it becomes more of kind of a very mechanical way of understanding the accounting. So the left means debit, right means credit. You have to debit the receiver, credit the giver. So you will lose the very essence of logic in accounting. So in my view, so the course that we are going to do now, we don't use the golden principles. We can build an excellent balance sheet and the P&L, which is a good amount of true and fair view in this. So without the golden principles, so therefore I'm going to term that as a golden formula. We don't require that formula. So what we require is a sound understanding of the double entry system, a good understanding of the rules of debit and credit, and a good understanding of the accounting concepts and principles. So this three is more than sufficient to have a true and a fair view of the financial statements. But further to that, if you want to bring in the harmony into the financial statements, yes, we can adopt the accounting standards. So now anyways, we are in the world of accounting standards. India's moved to the convergence of IFRS. So now it is called IND-AS, in accounting standards. So that's what where we are. So this is the reason that we started this course, that we need to fill this gap of the approach. The way we understand should be from the corporate requirement point of view. So the accounting state, most of the students with whom I have interacted, when I ask them what is accounting concept, it's not only the student, even the 1 or 2 years of experience in the corporate. If I ask them what is a matching principle concept, I mean, many of them with whom I have interacted are not, I'm not able to comprehend it in a manner in which it is. So therefore, and also the accounting concept, like the accrual concept and the revenue recognition. Is there any difference between a sale and a revenue? Why the closing stock does not appear in the trial balance? Why only balance sheet items are getting carried forward to the next year, and why not P&L items? So what is the actual difference between an asset and expenditure? This is one of the prominent questions, the difference between an asset and expenditure in the interview. So most of the students, they are qualified graduates, do not give a complete answer. They quote an example, like this is an asset, the land and building is an asset, machinery is an asset. But how do you classify between expenses and assets? So this is more of a practical point of view. This is the understanding from the corporate requirement. So keeping this in mind, and also for the employees who are working in the accounting domain, for them also this course would be extremely useful because typically in the MNCs, as you know, the category of the work is basically primarily we can look at it from the accounts payable viewpoint, accounts receivable, and the general ledger. So if you want to shift from accounts payable to receivable, or maybe if you want to have a cross, if you want to move to another department, like if you want to move to the general ledger, yes, maybe this course is extremely helpful to you. So we train you on a lot of adjustment entries that are basically the finance entries, which is used in the general ledger team so to come up with the financial statements. So all these are quite helpful for you. And we also train you on the fixed asset register, detailed fixed asset register. Maybe in the MNCs, maybe in the smaller companies, yes, you may get an opportunity to work on end-to-end accounting, but in MNCs, because it takes years for you to move from one department to another. So, and also an attempt has been made to translate. See, I'm basically from, I was fortunate to have an exposure to an end-to-end accounting. I'm basically from the software companies, working in the software companies for almost close to 10 plus years, and thereafter I took up the consultancy job for 5 years. So there was always an end-to-end accounting exposure for me. So therefore, this is how I learned my accounting. So in your case, people working in the MNCs, they would require a kind of training like this, a value-added program, so which would help them understand the process in the varied departments, and also help them in terms of promotions or maybe performing well in their own vertical of expertise in accounting. So these are all the benefits that we are looking through from this course. So if you want me to summarize the benefits, so this is basically for the students of post-graduation, this is for employees, and also this is for the learners of the accounting. So basically what you get out of this course is, one is you will develop a core accounting skill out of this course. So basically, you get to know the end-to-end accounting process. An attempt has been made to translate the 10 years of experience that I have. As far as the end-to-end accounting is concerned, I don't say that I would be completely able to deliver out the analysis part, but at least the accounting part, like maintenance of FA register, AP, AR cycle, the various entries involved in it, various amount of entries involved in the finalization, the bank reconciliation statement, how to review a ledger, how to analyze a ledger. So all this part is an end-to-end accounting process. So you're going to develop the core accounting skills, end-to-end accounting process, and this amount of knowledge would definitely be helpful for you to pursue further courses, maybe your courses like the commerce secretaries and the chartered accountants, the cost accounting courses, or any other course, maybe CMA, some students are doing CMA also. So once you have an understanding of the practical accounting, it's easy for you to pursue the advanced courses or the advanced the professional courses. So keeping this in mind, I wish you all the very best for this course. So let us start with this course. So now, before I get into the definitions of accounting and what the advantages of accounting, so all these things. So I want to set certain things very quite clear. So in terms of the approach, in terms of the approach, we have always been, including me in the academics, we always be status was like this. The student is always behind the sport, and he was lagging behind the subject part, maybe in terms of understanding the subject, because there's a peer pressure on the student for him to get through the examination, otherwise his career is at stake, and therefore he will be under pressure to, in terms of scoring, getting through the examination. But he would not be able to concentrate. I'm not saying he will not be able to fully, completely not concentrating, but he will not be able to concentrate on the core principles of the subject which he will be missing. So with this course, this is since this is there's no peer pressure on you to clear the examination. So here the objective would be, the student position would be saying the objective is to understand the subject in very detail. And naturally, if you, in case you take up the examination, physical exam, take the examination for the sake of certificate, then maybe you can give it all. So there we'll conduct the examinations, and then based on the score of 50%, we will give you a certificate. But anyways, once you're behind this subject, since you are now the postgraduates, like person you are already working in employees, I would like you to follow this approach, which is the student or the training here in this case would be behind the subject, would be always trying to contemplate on following the subject in detail and trying to understand the end-to-end of it rather to have a 360-degree viewpoint of it. So with this approach, I would like to begin the course. So now, first, we have come across the terms like accounting, accountancy, accounts. So is there any difference between these three, or is it just used interchangeably? So the accounting is concerned, it is nothing but the maintenance of books. It is practically doing of the record keeping, recording the transactions and maintaining the ledgers. The accountancy, it refers to the principles of accounting. You know, there are accounting concepts and accounting conventions, like the convention of materiality, convention of conservatism, you have revenue recognition concept, and you also have what you call the accrual concept, the separate entity concept, going concern concept, so many others. So these are all the principles. And when you say accounts, this basically refers to the books. So it's not strictly that I'm giving you the definition of these three, but this is how it is in common parlance that we use this terms, and also sometimes it is used interchangeably. So that's not a problem. Okay, so now before we get into the meaning of accounting, so let us try to understand the history of accounting. It's always good to start the history of accounting. Because it helps us to get an insight of the evolution of the subject, right? So where we are now and where we come from. So let us start with the history of accounting. So therefore, the traces of the accounting has been found 5,000 years ago. So there were some traces of accounting, they were found 5,000 plus years. So the first traces was found, so now the recorded one is the Mesopotamian civilization. In the Mesopotamian civilization, which is presently the Iraq, what we call it as the present Iraq. So there are some amount of clay tablets. The clay tablets are used, so there's some numbering, there's some lining there and crossing it to keep account of much probably the animal stock, right? Maybe to keep account of it, or maybe the agricultural produce. Maybe for that reason, they were maintaining the clay tablets, and they used to have some kind of counting there on the clay tablets. So the next traces are found in Egyptian civilization. Egyptian civilization. So here the accountant was referred to as eyes and ears of the king. So you could make out the importance of an accountant there. That means the accounting was widely incorporated in the Egyptian civilization. For reason, as you know, you would have seen in most of the movies, the Egyptian, the mummy, etc. There you would only find the golds and ornaments, right? So to safekeep the valuables like gold, ornaments, etc. Mainly a robust inventory system was developed. So there were accountants, and the accountants were referred to as the eyes and ears of the king. So if there were any mistakes in the inventory system, those days it was a dictatorship rule, therefore they were usually penalized and punished as well. So this is one reference that we have from the Egyptian civilization. So next was the Greece. In Greece, the accounts were used basically to control the public expenditure, that's for the government, and also to keep the track of the receipt of money. Okay, and in Greece, in the city of Athens, the coin system was introduced during this period, as well as the banking system did evolve during Greece period. Okay, so these are the references that we have as far as economy is concerned with reference to the Greece. So then it was the Chinese civilization, basically the Chow dynasty. They used accounting to evaluate the performance of the government, performance of the government. So they use the account in order to evaluate the performance of the government. So then it was India. In India, we know a famous personality who is also referred to as an intellectual person, and is a well-known economist. He was popularly called Kautilya, or in the case of India, he is popularly known as Chanakya. He wrote a book called as Arthashastra. Arthashastra means economics. So this book, in the book of economics, there are certain references of accounting. There are certain chapters on the accounting. So here it is interesting to know that here they used during those times they used opening balances and closing balance those days, and they also used the concept of capital versus revenue. Okay, the accountants were usually paid. The salary was highly paid. So to keep the secrets of the government inflow and outflow of the cash of the government accounting, so they were paying them high. So wish we had, wish they pay now, right now. Okay, so we pay to accountants. Okay, there were also auditors during those time in order to establish the check, rather to establish the accuracy of the books of accounts. So this was what, these are all the references that we have as far as the India is concerned. This is we have 350 BC. Okay, this is what we have. So next is, the next one is 1494. It was Luca Pacioli who introduced a book called, he wrote a book called Summa di Arithmetica, Geometria, Proportionality, and Proportionality. It's kind of a by head for me, this book name, because I've been handling this classes for a while. So the name of the book is Summa di Arithmetica, Geometria, Proportionality. This book deals with, for the first time, they introduced double entry system. So what is double entry system? Double entry system in a nutshell is to recognize the two aspects involved in the transaction. So therefore, the transaction, the recording of the transaction become complete in a sense. So it is basically the complete recording of the transaction. So what we tend to forget today is the double entry system. Because of this lack of understanding of the double entry system, our balance sheet do not match. Balance sheet do not match. It's not because of our understanding of the what you call the accounting concepts. No, it is because of the simple mathematics involved in the double entry system. So we need to be extremely thorough with the double entry system. So once you are through the double entry system, of course, the debit and credit will follow. So with the knowledge of double entry system and the debit and credit, it is possible for you to match the balance sheet. So you don't require, you really do not require an accounting concept in order to map the balance sheet. So what is the importance of accounting concept then? The accounting concept would make the balance sheet look more true and fair. It enables the weaving part. It makes it more true and fair. So that's the importance of accounting concepts. So in order to match the balance sheet, if you have to match the total debit and credit, then you have for more weightage on the double entry system. Okay, so this is what we introduced the Luca Pacioli. Why did we introduce double entry system? Is that in Italy, he was an Italian monk, by the way. So in Italy there was a lot of transaction happening due to the revolution that took place there, and the transactions exploded out of the territory. It was always in-house within the territory. The transactions were taking place, but now with this revolution, the transaction took outside the territory, and they involved the credit transactions as well. So now, in order to keep track of all these credit transactions, they know that you made a purchase, you made a sale, but you're yet to receive the money or you're yet to make the payment. So this is the same transaction, but this is the other part of the transaction. That is to owe. You made a purchase, but you're supposed to pay. You have made a sales, but you're yet to receive. So this is the same transaction, but it has two aspects of it. So considering that, we introduced the double entry system. Okay, we will get into the detail of this when we deal with the chapter called double entry system. So I would strongly recommend that you keep in mind, please don't ignore the double entry system. This is the system on which we are building the accounting. So therefore, this is an extremely important chapter. Okay, so this is one. So after 1494, Summa di Arithmetica, the book that he put, there was no other book that is said that for the next 200 years there has no other book. So I'd like to bring in these golden principles again. So the golden principles, if you just Google it and try to check who invented golden principles of accounting, you will not find any answer. There is no one person that was invented the golden principle of accounting. But who invented the double entry system? Yes, it's Luca Pacioli who introduced it. So the golden principles was followed somewhere in 17th century, right? And this was introduced in 15th century. The double entry system was introduced in 15th century. That means there is a gap of 200 years. So in this 200 years, there is no golden principle. That means with this gap, without the golden principles, the accounting was followed on the basis of double entry system. So that's why I say that you don't require a golden principle in order to do the accounting. Okay. So now, do you require any other approach? Yes, or maybe may or may not be, but it is sufficient for you to follow the double entry system, rules of debit and credit, accounting concept. These three are sufficient for you to build a financial system. Okay, so be extremely, let's be extremely clear with that. So now, next. After 1494, it was in 17th century, the concept of capital came to be. The concept of capital was introduced during that time. So in 1820 to 1870, this was an industrial revolution period. During this period, the accounting concepts evolved. Accounting concepts evolved. Okay. So then in 1900, we're back in India. Mr. Kalyan Subramanian Iyer. Kalyan Subramanian Iyer, who is considered to be a father figure as far as the commerce education in India is concerned. He furthered the cause of commerce education in India. In the science in 1900, he opened up the first accounting firm in India. And 1900 again, he opened up the first commerce college in India. The first commerce college was started in 1912. It was when the BCom was introduced in India. That is the graduation in commerce. That's degree in commerce was introduced in India. So Saurabh is engineer, who is known as the first president of the ICAI, that's the Institute of Chartered Accountants, Institute for Chartered Accountants of India. So there, Surabes engineer was the first president, and he completed his apprenticeship under apprentice. He completed his apprenticeship with Kalyan Subramanian. So therefore, we owe a lot of credit to Mr. Kalyan Subramanian Iyer because he furthered the cause of commerce education in India. Right. So thereafter, in World War One and Two, the caustic flour. So that is when the costing came into being, and the importance of costing was felt during that time. And in 1950 to 80 onwards is when the management accounting came into being. That's the importance of management accounting was felt. Okay, in 1949, before this, ICI was started. Okay, it was enacted through a parliament. So, Institute for Chartered Accountants of India, that was set up in 1949. So, 1977, 21st April, is when the ASB was started. It's very important. Accounting Standards Board. So this board is responsible for formulating the accounting standards. So we have around 32 accounting standards, 29 and 3 non-mandatory, 29 is mandatory accounting standards. So this accounting standard board was responsible for for formulating the accounting standards, of course, in consultation with various peers of the commerce industry. Okay, so now after this is where now we are in the world of IFRS. So India has already converged the IFRS, and now it is called as Ind Yes. So this is how we have evolved as far as the accounting is concerned. This is what the history of accounting in brief. So we started from 5,000 years ago in Indo-Mesopotamian civilization, and now in India we are in AS. That's we are already converged the IFRS. We are already following the IFRS now, and the world is witnessing the harmony in the accounting. So for for performing for the accounting purpose, you would require the sound understanding of the double entry system, the sound understanding of the rules and debit and credit, rules of debit and credit, and the very thorough understanding of the accounting process. These three are enough to have a good amount of prepare the financial statement. But why do we require accounting standard? Accounting standard is required to bring the harmony in the financial statement. So let us say, for example, the accounting, let's say the P&L with a similar amount of transactions, let's say 50 lakhs of revenue in Karnataka or in Bangalore, if it is yielding you a profit of, and also the similar expenditure, let's say 50 lakhs of sales and 40 lakhs of expenses. If it is 10 lakh, that is before depreciation, it would vary in, let's say, Delhi. If it has a 50 lakhs of sales and 40 lakhs of expenditure, it would still vary in the profit. It's 10 lakhs here, and there will not be 10 lakhs because the depreciation method used is different. So there arises a need for bringing the harmony in the financial statement. So when we follow a same depreciation method, maybe a WDV method, then we would be able to compare it and bring in harmony with the financial statement. So that's the importance of the accounting standards. So the IFRS is basically to bring in the global harmony. The accounting standard was basically to bring in the harmony with India, but the IFRS is to bring in the harmony with the global standards. So this is what is the history of accounting is concerned. Okay, so now let us get into the meaning of accounting and what are its features. So how do we do accounting as far as the corporate is concerned? Okay, so we do accounting even in our daily lives. We keep a track of all the expenditure, we keep track of all the revenues coming from various sources. We keep a track on all these transactions, but we have our own method of doing it. Maybe you can call it as a single entry method of doing it. But as far as the corporate is concerned, they have shifted the system of accounting way back since 1494. So that system is nothing but the double entry system, right? So in this system of accounting, the AICPA, that is American Institute of Certified Public Accountants, they have defined accounting as the art of recording, classifying, summarizing in a significant manner, transactions and events, which are in part, at least, of a financial character and interpreting the results thereof. So this is what comprehensive definition that is being provided by the AICPA, which is the largest accounting body in the world. So it is the art of recording, classifying, summarizing in a significant manner transactions and events which are in part at least of a financial character and interpreting the results thereof. So basically you have some significant manner of accounting. So in our personal life we have a grown approach, but in the corporate accounting we have an approach like this. So first we are going to record the transaction, and then we are going to classify the transaction that we have recorded, and then we will summarize the classified ledgers, and then we are going to interpret the results. So this is the significant systematic manner in which we pursue the accounting. So recording here refers to generalizing the transaction, and then classifying refers to creation of ledgers based on this transaction. Then it is summarizing, that is bringing the balance sheet and P&L. Right? Interpreting means to draw a meaningful conclusion out of the balance sheet and the P&L. Right? So this is an accounting cycle: to record, to classify, same transaction, to classify, to summarize, then we will be able to record some meaningful conclusion out of the financial statements. So now, what is the primary objective of accounting? So it's a primary objective of accounting is, I would say, it is two. From the corporate point of view, you should be able to know the performance of the business. And also you should be able to know the financial position of the business. So when you say performance of the business, it means the profit and loss account. When you say financial position, it means the balance sheet. Okay, so in order to know the performance of the business and in order to know the financial position, of course, you need to prepare it at regular intervals, what you call the financial statements or the balance sheet and the P&L, so to assess the performance of the business and financial position. There are so many other advantages, like it's a amount of information for the data, and there's also it's your own as far as the balance sheet is concerned, you can read the various receivables involved and various other portion of current assets, and it's also a statutory requirement, it's government compliance. So all these things are there, but anyways, the primary objective is to know the performance of the business and the financial portion of the business. So we are going to use these two terms very regularly, and therefore I have highlighted these two items here. Okay. So now, this is the meaning of the accounting. So we are going to record the transaction, we are going to classify it, summarize, and interpret these results. So now, is accounting science or is it an art? Right? So in order to understand whether accounting is a science or art, you should be able to know the meaning of science first. So first, what is science? Science is nothing but a set of process involving knowledge. A set of knowledge process, you can call it that way. Okay, it has a set of process. It has a set of principles, knowledge or principles in it, and it works exactly the same way, that is science. So is accounting a science? Yes, the accountancy has set of principles in it. It has various concepts and it also has conventions to follow, and therefore it has set of principles. So you can conclude that yes, accounting is a science. Accounting is a science. Is accounting an art? So what is art? Art is nothing but the application of the knowledge of principles. Knowledge of principles. Okay. So this is accounting the art. Yes, we do apply the principles, we do apply the accounting concepts and conventions when we are preparing the financial statements, and therefore it is an art. So in this sense, the accounting is both science as well as art. Okay. So this is basically in brief as to what is the history of accounting that we are trying to communicate to you, and the meaning of accounting. So what is that you need to know in accounting in order to perform accounting? I repeat again, I reiterate the point that you must have a sound understanding of the double entry system. It's a simple arithmetic, that's what we need to know, but we cannot ignore this. You cannot ignore this, and you should know the rules of debit and credit. A sound understanding of the rules of debit and credit and the accounting concepts. We'll get into this accounting standards later, but with these three, let us try to concentrate more on these three things, and let us build a balance sheet. Again, we will revisit the accounting standards, visit the accounting standards, and then we are going to reconstruct the balance sheet in line with the accounting standards. So this is what we are going to do. Okay, so this is what it is about the meaning of. I just wanted to introduce you to the accounting. So in the next video, we will be digging in detail about the accounting concepts. So once I complete the accounting concept, then we will go through the double system and rules of debit and credit and how it is followed in the product. So this is what we are going to learn in the upcoming videos. Okay, so thank you very much for watching the video. Thank you.